How much steam is left in the Bitcoin bull cycle? And is there still upside potential, or we reached already the top?
Yeah, I think that's a really good question, and admittedly, it's hard to answer. So if we look at a couple different indicators, they're telling us somewhat conflicting things. And so we've had a 2.5 month consolidation. We've built up a lot of support here, but also a decent amount of resistance. And if you look at a bunch of indicators like the HODL wave, like for example the cycle of longer term holders selling into some of the new bullishness, that's not been as extensive as previous cycles so far, which generally indicates that there's probably still more to go. If you look at different momentum indicators, like the how far above the market capitalization is compared to the realized capitalization, which is kind of a measure of cost basis, and other sort of say deviations from moving averages, it never really had quite the blow off top that it had in previous post-halving cycles. And so by a lot of those metrics, there's probably still upside to go. On the other hand, there are some indicators like the pie top indicator that have signaled a top. And so there are kind of some mixed signals out there to be on the lookout for.
How much steam is left in this cryptocurrency and specifically Bitcoin bull run? Is $100,000 still in play for 2021? In this video, Investments Analyst Lyn Alden gives her thoughts on how the rest of the year will play out. Make sure to stick around to the end of the video where I cover some bearish Bitcoin data that has just come out. Also, a growing number of cryptocurrency investors are subscribing to the channel. If you enjoy the video, consider subscribing. It's free and you can always change your mind. Enjoy the video.
And so my base case continues to be higher, but it's certainly it's a more mixed, kind of a less asymmetric outcome than it was, when I made the call back in 2020 throughout that period. And so it's still in that inflection point where it could go either way, but my base case would be that there's probably still more to go in the cycle.
And also, I heard that you were also analyzing the flows that are coming from cryptocurrency exchanges that are bigger than the flows coming into cryptocurrency exchanges. That should be also the sign that investors are still piling up Bitcoins, right?
Yeah, that's been actually one of the things that's different from every other cycle, because in previous cycles, there was like small periods of time where coins left exchanges, whereas this was by far the longest period of time where coins left exchanges. And so the most bullish version there is that you basically have this big influx of corporate buyers and other institutional buyers locking up coins in cold storage that are probably not going to move for a while. The more kind of a neutral interpretation of that is that because of the rise of things like stable coins, especially in this cycle, Bitcoin's less used as the unit of account for trading different crypto pairs. And so it's more of an asset in its own right, and therefore there needs to be fewer of it on exchanges because stablecoins have somewhat taken that role in the industry. And so you can, bulls and bears can kind of interpret that in different ways, but overall that's certainly an interesting sign because we're not seeing coins go to exchanges like we'd often see towards the end of a bull cycle.
In a recent interview, you said that at this point, Bitcoin investors, at least some of them, should think of de-risking their Bitcoin investment by taking some money off the table and putting it into other assets. So can you explain what is the rationale behind this recommendation of yours?
Yeah, it's not a recommendation, more so as just people should check their risk tolerance, because we are seeing a lot of froth throughout the industry. We have some of the meme coins, for example, doing exceptionally well, and those are kind of warning signs for the cycle. And so, for me, I had the ironic problem where, I invested in Bitcoin early last year as, kind of a moderate position. But when that goes up like, 8x, that's suddenly a very large position. And so then you're basically managing that large position relative to the other positions in the account. And eventually there could come a time where rebalancing would make sense. Now, because I've done a lot of work on the protocol, I have a pretty high conviction on it. And so I'm fine with maintaining a pretty large position. But different investors have different risk tolerances, and so some investors are not fine with that large percentage of their gain still being in a single asset. And so for people who would have trouble with drawdowns or periods of volatility, it can make sense to rebalance. And so it really comes down to investors kind of analyzing their own behavior related to volatility and making a call based on their own conviction on the asset class. I think there's a realistic case for it. I mean, certainly as a Bitcoin long, I'd like to see it happen. I try not to have aggressive scenarios as my base case, and so my base case basically is that as Bitcoin goes from near at zero and as it becomes a larger and larger asset class, that each post-halving bull run will be a smaller percent gain than the one before it. And that's not necessarily going to be the case, but that's kind of my base case assumption, because as the law of large numbers kicks in, it takes a lot more capital to move the price of the asset. And so my base case is that this will be a cycle similar to 2017, a little bit less perhaps, and that's kind of how I'm looking out for my own, say, position sizing and things like that. Now, the case for a larger cycle is that this is the first cycle where we have a meaningful amount of institutions on board. Some of them probably intend to hold permanently. You'll have pools of capital that are interested in rebalancing, right? So if Bitcoin does really well, they might trim it. We've already seen that in a couple of portfolios. On the other hand, if Bitcoin were to dip, they could rebalance back into it. And so basically Bitcoin's been through enough cycles now that I think a lot of investors, especially some of these large investors, are confident in it, and so they're willing to kind of buy the dip faster, you could say. And so my base case would be that in addition to maybe not having the same percent gains as previous cycles, that Bitcoin's drawdown I think would also be less extreme than some of the previous cycles. And so I don't know if I'm fully on board with a super cycle theory, but I certainly think that it makes sense for that idea to be out there and for investors to kind of weigh the probability of that happening. I think there's a big variance there. So if you look at previous Bitcoin cycles, I mean, they generally got a little longer each time. And so they've been less explosive but longer. And so if that trend were to continue, it could leak into 2022 this time around. If not, if we look at some of the macro headwinds, for example, some of the employment benefits are expiring in the United States in September. And so basically it's a little bit less fiscal support that's going to be here. We're starting to see, some Fed members get concerned about, market kind of euphoria or potential for inflation, and so some of them have talked about tapering asset purchases, and so some of these less liquid financial conditions could put downward pressure on some of these assets that have gone somewhat parabolic, which in some ways fortunately is fine for Bitcoin because it's already been in this consolidation, whereas I'd be more concerned about lesser tokens that have, say, gone absolutely vertical in recent months. But basically, as we look out into quarter three and then, into quarter four, some of the macro risks grow a little bit.
So there's Lyn Alden explaining although she does think there is more steam to go in this bull run and that there is a chance of a super cycle, her conviction is not as high as it was before. Now for some bearish on-chain Bitcoin data that has come out over the last 24 hours. You guys know I like to cover all perspectives. Out from sentiment, we can see Bitcoin flowing onto exchanges has hit the highest level since January 14th this year, reaching a 4-month high. The supply of Tether or USDT is also at nearly a 2021 low, showing that investors are very hesitant and fearful to buy this dip. Anyway guys, take that as you will. Let me know in the comments what you think in regards to how long is left in this cycle or if we've already peaked. Hope that provided you with some value. I'll see you in the next video, and as always, have a great day.